And we're live. Good to have you back. Good to be back. I want to talk to you guys today about why I left the securities industry. Now, I want to be really, really clear on this. I'm not trying to sway you one way or another. I just want to share my experience. The securities industry and the insurance industry, specifically the life insurance and the securities being mutual fund and annuities, that industry was very, very good to me, has been very, very good to me. But I decided to leave it. And so I want to share with you why I left it. Um, and maybe this helps you somehow in the future. I want to start off with the positive. The securities industry, the insurance industry, I was working for a captive insurance company in the state of California, a very, very large insurance carrier. And I have my securities licenses, specifically the Series 6 and the Series 63. Those were the two tests that I had to go study for and pass so that I could be affiliated with the broker dealer. So, without getting too fancy, essentially, I had to pass these exams um, through the state and FINRA so that I would be able to uh, offer securities products. Now, when I say securities, those are variable life insurance policies, variable annuities. And there was a law that was passed in California where even indexed products, indexed annuities, and indexed life insurance potentially, I don't recall right now, but indexed annuities in particular, you needed a securities license to be able to offer them. So first, I started in the industry, to give you some context, strictly selling life insurance. And anytime a opportunity came to help a client on the securities side of the business, so whether it was managing a mutual fund or a variable life insurance or a variable annuity, I would have to hand that off because I didn't have the licenses to be able to write that policy or open that account. So I eventually got my securities licenses, again, the Series 6 and the Series 63. And it opened the opportunity to help a lot more the clients and create other sources of revenue, because now you can, aside from selling life insurance, I was able to open up accounts, IRAs, Roth IRAs. I was able to manage unit investment trusts, manage mutual fund portfolios, open up variable life insurance policies, variable annuities. So it was really, really cool. And it makes sense that when you are dealing with those types of accounts, you have to do a lot more preparation and homework and know your things very well. But on top of that, look out for the client, because a variable account like a mutual fund or stock market type of account, even though I was not selling stocks, those are seen as riskier, right? And so you obviously have to do risk tolerance questionnaires and all these things. Now, getting back to why I left. Well, number one, the securities industry and the insurance industry, I was specifically doing life insurance and securities products. They provided me the ability to sell, generate income, and eventually I ended up building up a team where I had two assistants that were scheduling appointments for me, doing a lot of back end things, and then myself as the sales. So it was three of us. We actually broke six figures. So gross income to the business was over six figures, which was a big, big deal. We made it to the $1 million round table of financial professionals, which is a industry recognized achievement. And then achievements and awards with the company that I represented. And I don't want to talk bad about any particular company, but one of the things that I was not a fan of was the the regulation that was imposed, let's say, or that was needed in that industry. Now, anytime when being that I was with a what's called the broker dealer, they needed to know exactly what my investments were. So I had to disclose what's called an OBA, an outside business activity. So if I owned any rental property that was for investment, which I did, I had to put that on this form. If I owned any stocks, I had to put that account on this form. If I owned any crypto, which I did, I had to put the account and the company, the brokerage on this form. And it was a there was a lot of oversight. They wanted to see where I was investing, because I guess that's just part of their process. The other thing that I was not a fan of was the fact that with social media, I wasn't able to freely talk about business matters or promote. They wanted you to have, and this was a captive insurance company, they wanted you to have, uh, if you were going to promote for business, an account that was basically every post is prefabricated, pre-made, so that you can just hit post. And actually, there was even some products like Hearsay and different companies where basically they post for you on your social media. So I didn't like that I didn't have the freedom to just talk about my business, say what I wanted to say. Every time that there was a review from a compliance with the company, they wanted to know if I had any uh, social media, whether Instagram, Facebook, YouTube, that was for the purposes of promoting my business other than personal use. And if I did, I had to get it approved through them. So that when I first got my securities license, that's when that regulation took place, that oversight. And I didn't really like it from the beginning. However, I was building a business, and I just understood that as that's part of the cost of doing business. It's part of, but I always in my heart knew that I personally wanted to be on social media, have a YouTube account. I believe that a business that is not online doesn't exist. I believe that you can build a brand online through whatever social channels, YouTube or anything else. I think that it's really important. LinkedIn. However, I wasn't able to put my personality on the branding that I was doing. I had to put pre-made posts if I was going to post about business. So I just decided not to. And that's what happens with a lot of these companies. I'm not going to generalize, but you see it if you're friends with people that are in business and they're in the securities industry, whether it's a financial investment person or if it's a insurance person. Most of the time they have to post things that are pre-made, and I understand from a regulation point of view that makes it a lot easier for compliance for the insurance company to just oversee that nothing is being said that is bad financial advice. And I think at the end of the day, it all comes down to money, and they want to protect their butts. Now, I want to talk about the positive again on the income side. I was really passionate about what I was doing on the life insurance side, and that was a really, really good way to generate income. Now, on the life insurance side, one thing that I noticed was most of the income that was generated was a large lump sum at the commission at the sale of an insurance policy, and very little to no residual income or passive income. But one thing that I noticed on the investment side of the business, whether it be variable life insurance or mutual funds, IRAs, was the ability, and annuities, was the ability to build a passive income or a residual income through these investment accounts. Now, I got to a point where My monthly income that was residual had gotten somewhere to about, in 3 years, I got it to somewhere around $800 a month. I'm going to just give you that range. I don't remember the exact amount. And to give you some context, I sold my book of business, and I'll get into that, in December of 2020. So, the year of the pandemic, when it first hit, I decided to leave the industry and make a career change. And so that was December of 2020 when I actually sold the book of business. And that's another thing that's really cool about the securities industry, is that depending on the company that you represent and their rules, you could potentially build a book of business that potentially you could one day sell it. So that was really, really cool about it. You're not just working like an hourly or for a commission only. You actually have a business that you can sell for a multiplier, and upon you leaving the industry, if you ever decided to. I actually, one of the ways that I grew was through acquisition. I had bought another advisor or financial representative's book of business that when he was leaving the company, sold to me. And I made him an offer, and it was for about one time what his residual income was. So if the residual income was, I'm just going to put it, I think it was around $1,000 a year, something like that. I offered him like $1,000, just one time. And then I took over all those accounts. So then now I was making $1,000 a year. So as long as I kept those clients, taking care of them, and maybe even built those clients up, I would be then making $1,000 a year. And after the first year, I get my money back, and then essentially just making that residual income. So that was a really cool thing about the securities industry that I liked, was the ability to build a book of business, they call it, a book of business of clientele, that if you take care of and you take good care of, it can grow substantially. So for me, again, it got to somewhere around $800 a month or $700 a month. I don't remember the exact, but that was great. I mean, it was a way to pay some of the bills, pay some of the staff, and on top of that, the majority of my income came from new business sales. Majority being life insurance. So what I noticed is that with the company that I worked with, I noticed there was a trend. A lot of people that started in the industry, in the company, started doing life insurance first and moved into the investment world. Life insurance is a little bit of an easier type of sale, less licensing involved, and it's a quick way to make commission, but there's very little to no residual income from there. However, on the investment side, as you got better at that, they started moving more and doing more investment business and less life insurance. Now, I was at a point when the pandemic hit where we had just won awards with the company. We had made it to the $1 million round table. We had broken six-figure income for gross for my office, for my team. And we were setting records to double that the following year, the year of 2020. And we were already on pace for that January, February, then comes March, right? And so the company that I was working with, which was a captive insurance company in California, decided that because of what was going on, they were going to pause the writing of new life insurance policies, new business, for anyone that had certain underlying health conditions, or if you met a certain health category or worse. Meaning, if you were in like perfect health, you could still get a life insurance policy. But if you had some conditions, if you had high blood pressure, high cholesterol, maybe took, diabetes medication, whatever the case, they were not offering you life insurance policies at that time. They put it on pause. Again, I'm not talking bad about this company or any company in particular. I'm just saying what happened. So when this happened in March, all of a sudden, the income to my business was cut in half essentially overnight, because all of the meetings that I have built up and the clientele for new business that I was writing, which was how we made the majority of our income at the time, was through life insurance sales. Maybe 80%, maybe 70% of, maybe I would say 70 to 80% of the income to my business was still through life insurance sales, and then maybe 20 to 30% was in the investment sales and residual income that was building up. So when that happened and the company said everything that anyone that has an underlying health condition and meets these categories of health, we're not going to be able to write them. You have to write them through some other third party carriers and other things like that. It meant a huge hit to the income. And having two team members at the time that were on a hourly, and being a commission business, and I was in it for 3 years as in the securities business. I was in the insurance industry for much more than that, over 8 years that I had been selling life insurance. And at 23 years old, I actually, so that's 2013. 2013, I actually stopped getting hourly income, and I went completely commission sales in life insurance specifically. So I have been in the industry for a long time, but only 3 years in the securities industry with my securities licenses. So I didn't have enough residual income built up so as to, when the pandemic hit and the insurance company, the captive company I was representing, decided to shut off new business, essentially, it meant a huge income drop, and I had to make a decision at that time. And long story short, long story long, I decided to make a career change. And the securities industry, as I mentioned at the beginning of the video, there were several things I wasn't a big fan of. I didn't really like that very high regulation, that I couldn't have social media, that I couldn't do certain to promote business, that I had to disclose every investment. Those were things that I didn't really like, and I realized that I had no control. And that was a big thing for me. Again, it could be different if you're working for a different company, it could be different, but if this sounds similar and you're working for a different company, then it's more of an industry thing. And I get it. Again, it comes down to the money. If you're giving bad financial advice, then the company you represent could get somehow tied into that. I get it. But the control that was imposed, I was not a fan of. I've always been a fan of doing my own thing, saying my own thing, promoting, going on social media, doing all those things, because I think that's part of what a business needs to do to survive and thrive, actually, to thrive in the current climate and moving forward. And so, due to the lack of control, meaning that at any point in time, once the pandemic was lifted, all things went back to normal, let's say, what I was thinking was that they can do this again. The companies can say again, hey, you cannot write this, you can write this. And after seeing many changes, even before this, where there was a lack of control, for example, if a company wanted to change the commission structures and pay you less for doing the same job, that actually happened with the company I was with years prior to me being in it heavy like I was. And so I saw that there was very little control. And so that's why I decided to leave. Again, the securities industry could be a really good way for you to make money, good money, and invest it and save it. And You can learn a lot. You can meet a lot of cool people. You can become part of the $1 Million Round Table and different things like that that you can learn from other professionals. And I think overall it's a great industry. But if you're someone who wants to have a little bit more control, less disclosing of all of these activities that you do, of investments, or if you want to be online and you notice that the company that you're representing is limiting you in that sense, then consider, potentially looking at other options. Again, when I decided to leave, it was a big decision because I actually loved what I did and was very, very passionate about it. And I still think it's a great industry. However, when I decided to leave it, I was able to sell my book of business for a multiplier of my revenue. And so, like I shared with you, if I was making somewhere around $800 a month in passive income through the managing of different accounts, like unit investment trusts, like annuities, like some life insurance, like mutual funds, and I had built that up, and so I was able to sell that and for a lump sum, and then walk away, and then go into different endeavors. So I hope that gives some insight. That was my experience with the securities industry and the life insurance industry, and I hope it opens the doors to you somehow. But I think overall, you got to find what you're passionate about. That's what I believe in, finding what we're passionate about. And if you find road bumps or things along the way, keep looking, keep seeking, and eventually you'll find what it is you love. But again, the securities industry and the life insurance industry was a great industry to me. And I think moving forward, it could be a great industry to be in as well. It's just for me, I was ready to move on and make a career change. And overall, I'm really happy with that decision. Wish you guys the best.